On-Demand Pay is an evolving trend in the human capital management industry and represents the next evolution of payroll. Considering a pay process that has not changed since the 80s when direct deposit was first introduced, On-Demand Pay represents a sea change. This increases the frequency of access to earned wages from the typical weekly, bi-weekly, or monthly payday. There's a growing ecosystem of solution providers that are operating around this area, and it's driving an incremental revenue opportunity for the HCM vendors. Applications here, as well as downstream extensions in areas such as financial wellness, represent sizable new markets for the HCM vendors. And considering a single-digit penetration rate in alternative funding markets, such as the payday loan industry that reaps over $7 billion in fees annually, On-Demand Pay represents a sizable new revenue opportunity, and there's already a large installed client base to leverage On-Demand Pay. So what's driving demand for On-Demand Pay? An estimated 75% of US workers live paycheck to paycheck and struggle to make ends meet in between pay periods. Just as Amazon and Uber have changed consumer experience, the prevalence of peer-to-peer applications such as Venmo, PayPal, and Zelle are changing money movement expectations. The opportunity for HCM vendors to participate here and integrate with these solutions is substantial. Emerging on-demand pay solutions can substitute for unwanted employer pay advances, predatory payday loans, or penalties from bank overdrafts. And the relative cost difference is substantial, a fraction of the average payday loans that we estimate as low as 7%. Employers are increasingly embracing on-demand pay too, as they recognize the benefits. It helps to reduce employee attrition, raise employee productivity, and it can serve as a point of differentiation at a low to low-cost means in a tight labor market. Furthermore, the functionality does not need to impact disbursements by the employer, and this reduces the administrative and the cash flow concerns. So how does it all work? The mechanics vary in existing and emerging applications, but generally, employees will sign into the On-Demand Pay app on the mobile device. Within the app, they can view their available earned net wages. They request access to available net pay, and that's sent to the requested form supported by the provider, such as direct deposit, pay card, or digital wallet. Any remaining net pay not advanced, less any applicable fees, is paid to the employee via normal payroll procedures. Today, the HCM vendors are largely reliant on the third-party point solution providers and have shared economics. However, there are a handful that have developed native applications within their existing HCM suites. We believe these first movers will have the best advantage for medium-term revenue tailwinds. In a recent study, only 6% of employees had access to on-demand pay. However, 72% want access to those funds before payday. We believe this trend will accelerate and become a sizable proportion of the market over the next several years, led by solution economics, regulatory issues, and just broader awareness. HCM first movers will have an advantage as they dictate an evolving market. I'm Brian Bergen, Cowen's IT, Business Services, and Human Capital Management Analyst.